Sanjiv Bhasin from India Infoline is now with us. Sanjiv Bhasin is now with us. Sanjiv, good afternoon. What's the view? You think why are the Indian markets falling? We never fell when China was falling about 20-30% of the high, but what has changed this morning?
Yeah, hi, Pankaj. Well, its market is all about sentiment. You can't keep defying odds. Yes, there was a positive correlation that with the global correction, we were not participating. In fact, we were charting our own course. But I don't think that will hold. I think there could be a further case for weakness creeping in. Firstly, the China fall is not to be taken, just as a small blip. It is a big event. You can imagine the amount of collateral risk which has gone there, and a large part of the holdings has been FI driven. The Chinese market is not an easy entry and exit market. It has these type of huge upswings on the way up and huge downswings where hardly any people can get in or get out so easily. The impact cost is more. Secondly, you still have Greece down under, and you have the risk of bond yields exploding in Italy, Portugal, Spain, you name it. Peripheral Europe is again on the cloud. You've got rain, which is again decimated in the last 2 weeks, and we've got consensus, even though the rupee is strong, a consensus that earnings will not be very, very pleasing, which is going to be unleashed now in the next few days. So given that, I think we've reached maybe the top at 8,500. I don't see the market going past it in a hurry, and I think volatility will rise, and we have a slightly negative bent of mind. We think from here till end of August, Nifty could trend all the way down to 7,600. If this global crisis persists and tends to get worse, then we will have a positive correlation on the way down.
Mr. Bhasin, I'd like you to focus a little on today's fall and whether it can be entirely attributed to China, or do you think it's a mix, like you were saying, a mix and what has been happening in Greece? Because the sense that one got from the market reaction earlier this week was that Greece is almost now a non-story for India. We had shrugged off all Greece concerns, but today's sell-off in many ways, once again, a reminder that yes, we're not entirely insulated, we're not entirely resilient to what's happening around the globe. In fact, some have actually been talking about a silver lining for the Indian markets if there is a China crash.
Well, on paper, all that looks good. When China was rising, you all said India is underperforming because there is money chasing there. In the end, how do you chase value and how do you sell? So like I said, I held the views, the FIs buy high and sell low. It's not an impact on their intelligence, it's the way the market cues are.
Right.
You are right. The market was showing you a silver lining, and we were in a strong spot with the rupee and our.
But doesn't this crash put us in an even sweeter spot right now? Because after all, where does the money go?
Well, Sweta, there is a lot of money which has been made. From 8,000, you've gone non-stop to 8,500. A lot of profit was there. B, collateral flows and risk on Greece and the China factor, which is 10 times the amount of Greece, that is not going to be rushed away under the carpet. There are people who have exposure there, and they will be wanting to liquidate in other markets to balance that out. C, we don't even know where Greece and Greece exit is there on the euro or not. What is the impact on a lot of the peripheral countries? So there is uncertainty has crept in, and in uncertainty, the best thing to do is to sell. So okay. I think that could be the cues for the next few days.
Do you see that trend continuing now in the markets, at least in the next few sessions or next few weeks, where the global cues have taken over in many ways? We know we're going to enter into results season also, and that will have its own bearing on the market. So if there are too many negative triggers, two obvious negative triggers right now is Greece and China. And now if we see a negative domestic trigger as well, what are the kind of levels we could be talking about?
Well, like I said, markets will always have optimism and pessimism on the way up and down. And like we said, if volatility does creep in and global cues start to dictate terms, then, I don't think 8,000 on the way down can hold, because that has been the threshold or the support. I have a vision that maybe in the month of August, you could actually test 7,600. But that would be an opportunity to buy. On the other hand, Sweta, we don't know how prolonged this short-term crisis can escalate or not. That only time will tell. Right now, if you ask me, Germany, which has been the bellwether and which has been the outstanding market of Europe, is down more than 13% from its high, which is a signal that there is a lot of weakness, there is a lot of quirkiness, and having the maximum exposure as far as the euro and the Greece markets, there would be pressure there. So how these things are handled, how collateral risk is again measured, because I think China is not to be taken lightly. The fall is exceeding most market analysts' expectation.
Mr. Bhasin, to stay with us, I'd like to focus on one particular counter, Yes Bank, that has been in the news. There have been some downgrades there, and Pankaj has been taking us through what's really happening. We've got a management call there as well. Pankaj, over to you.
Shweta, thanks for that. If you look at Yes Bank, we just discussed what UBS has said about it. Rajat Monga, CFO and Group President Financial Markets at Yes Bank, is now with us on a phone line. Good afternoon, Rajat. Can you just first clarify the point that UBS is trying to make in terms of their report?
Right, Pankaj, thanks so much for that. We're going to just get a quick view from Mr. Bhasin on Yes Bank and the way forward for that counter. Mr. Bhasin, you just heard what the management had to say.
Well, of the private banks, Yes Bank has been one which has always delved into some of the riskier assets. So the asset quality is something which has always been a slight bit of a negative factor, and they have indicated, some of the power producers and so on. I thought the stock was fully priced at 850 plus. And it's because it's overowned by a lot of the foreign institutional investors, such a downgrade could have meant that there has been some unwinding over there. It has been a bellwether stock which has been an outperformer, but we think that valuations closer to 725 to 750 are more comforting. Also, we think that as a high beta trade in the private sector bank, Yes Bank falls into that category. So if the market falls, it'll be, it'll fall more than the market. If the market rises, it'll rise more than the market. From what the management has said, Sweta, it seems that, any management will defend any fall or negative perception. But we think, yes, these are the small problems which can creep in. And if we saw IndusInd Bank, which reported numbers last quarter, we saw a sharp deterioration in asset quality. So it's about time some of the private banks also came and disclosed more of asset risk which is there on their books.
All right, Mr. Bhasin, thanks so much for sharing your perspective. Let's shift gears a little, and at a time when China and the Chinese markets are in focus, we also know that there is a BRICS summit that is underway. In fact, Prime Minister Modi has left today to attend the summit. The Chinese leaders will also be there. And what will be the major outcome of the summit is something that NDTV's Vishnu Shom will be tracking for us. Meanwhile, he spoke with the new BRICS Bank President KV Kamath on the agenda for the BRICS Bank and how the bank intends to protect nations from currency fluctuations. Let's listen in.
Do you see the new development bank being an option or an alternative to the traditional Bretton Woods banks?
Well, it's going to complement all existing players. We will understand the needs of developing countries in today's context and partner with them. Otherwise, we will look at a collaborating role and the cooperating.
Right. And sir, what about trade in local currencies? Is that a big priority for you?
Clearly, I think the developing countries have come of age or are coming of age, and we will look at what are the alternatives for funding ourselves. It's early days, but it is in top of our mind.
How would that be of use to India? Is the last question.
I think for every country, if you can de-risk currency fluctuations, it's a great thing for trade as well as the country itself, and that's what we will aim for.
Thank you, sir. Thank you.
Markets below the 8400 level mark. In the last 20 odd minutes, markets have been stable. We're trying to go and trying to make an attempt to go up, but at the same time, every time we go up, we see some sort of supply coming in, but it's not a meaningful supply that what we've seen, at least in the first half. The cut was quite sharp. It's the metal names, anything that has got to do with China, anything that has got to do with banking, funding is something which is going down. It's a classical sort of a risk-off trade from being risk-on till about yesterday. Till yesterday, it was all hunky-dory. It was about risk-on trade, and right now you're talking completely risk-off. Even names like Vedanta, Kane, Tata Steel, JSW, all of them are down 4 to 10 odd %, but there are no buyers in this particular market. Sanjiv Bhasin is still with us. Sanjiv, what would you make of Tata Motors, the fall over there? We discussed about Yes Bank earlier. The other big loser is Tata Motors.
Again, Pankaj, it's been a bellwether stock, and it's owned in almost every portfolio, whether it's local or it's foreign. And reason being, the numbers have been, repeatedly disappointing. Plus, I think the base had become much too high. And I think a lot of the, warning signals came when the company came and did that rights issue, where, we did not see any unwinding on leverage on the DVR. I think that sent a little bit of a squibble amongst most long-term investors. The numbers have disappointed and the stock has seen a correction, I think fairly steeply, because it's fallen almost 20% from its recent highs. Also, Pankaj, it happens to be a very, very overowned stock, like I said, in the four-wheeler sector. And even though its valuations now are close to this 380, 400 are very compelling, I think an overhang of over ownership can keep the stock under pressure for the time being.
Right. So at what level would you come out to buy this name? You still expect a 10-15% downside from your on?
See, Pankaj, the problem is that even though JLR has been a bellwether globally, and now with this Chinese meltdown, I think it sent a little bit of shivers, because that has been their big market. Locally, we want some resumption of positive news on the CV cycle, and that has been far and fetched. We've seen outperformance from the likes of Ashok Leyland and Eicher Motors, and I think Tata Motor is not being able to focus that. So I think we need some positive guidance in the numbers, where we see some traction on the commercial vehicle locally, which would put less pressure on the JLR side. So a combination of both means that if you are a long-term investor who's willing to sit through this 1 year, then ideally this is a very, very good opportunity to start buying Tata Motors, notwithstanding the volatility which you see for the next few weeks or for the few months. So I think this is an ideal time if you are a long-term investor who can sit through for 1 year to start buying Tata Motors. But we need more guidance and more number clarity, visibility on the local business from the management.
Vedanta Limited is down 9%, of course, for reasons what's happening in China. You think at 145, a lot is factored in terms of Vedanta Limited? Sometimes prices would go up, sometimes demand would tend to improve.
Well, unfortunately, I've been, a critic of that whole Anil Agarwal scenario of merging each and every company. First, it was Sterlite with Sesagoa, and then Sesagoa with Vedanta, and then Vedanta now with Kane. And unfortunately, for the shareholder, it's been a value destruction chain across the board. So I would not be recommending this, even though valuations may be very, very mouth-watering. We still think there is such a big overhang as far as some key institutional investors, which is going to keep this stock under pressure for time to come. So for us, even though Kane stand out at the most, it's one of the best plays on energy here, but we think the destruction on the balance sheet has been immense, and for that to repair would take a lot of number crunching by the management.
Right. Tata Steel, that's also down at 4%, 284. You just want uncertainty before you buy any of these names. You want certainty before you buy any of these names.
Well, Pankaj, the thing with Tata Steel is that they've taken all the necessary, go-aheads from the shareholders on piecemeal sell-off on chorus. But unfortunately, that is not taking place. And now with this more volatility creeping into Europe, I think again a time-bound process will, remain there. Their numbers last quarter were horrible, with the margins coming down to even less than 6%. So till we don't see an uptick on reduction of debt, we don't see a return of equity, I don't think Tata Motors is someone where someone is going to put their money. In fact, over ownership again could see that this China stroke commodity sell-off put pressure on the stock. On valuations, it's been attractive from 350 downwards. So there's no call on the valuation. It's very, very attractive, but you have to sit through this volatility. And like I said, return on equity and reduction in debt are the two keys.
HUL is up 1%. Do you think flows will start going through defensive names again with such sort of sharp cuts coming in global equities?
Well, yes, that has been our silver lining, that we've been recommending that as a disclosure, and we think lever is well poised to be in 4 figures. So we have a year-end target of close to 1150 on lever, and we think in any volatility you should be using this to buy. Also today, it's the best beta trade as far as being a defensive and in the space which is where it's been a standout. So ITC has been a laggard there, and we think lever is definitely headed to new highs in the next 6 months.
Mr. Bhasin, I just want to talk to you, especially when we're talking about the commodity sell-off on the OMC stocks, the oil marketing companies. Which of these stocks do you think could possibly see a greater decline? Are there any favorites or any picks that you have in this? In fact, if we could pull up the 3 OMC stocks, BPCL, HPCL and IOC. So IOC is in the green today, up about 0.5%. BPCL is in the red, that's down about 1.5%. and in fact it's just fallen. If you can see that chart there and the kind of weakness we've seen, HPCL is just turned into red territory. It was holding out in the green, but again some weakness that we are seeing in these two counters. Now, how will the commodities sell-off really play out for these counters? Because what we saw last year, of course, was sharp losses in terms of global crude prices. Then we saw a rebound coming. Now, once again, commodities are seeing a sell-off. So how does it really play out for these three counters?
Well, Sweta, they've been in the sweetest spot they've ever been in the last 5 years. You've had diesel decontrol, you've had pricing process, and you've had equality on far as the pricing strength goes. So they are the, like I said, in the best spot they've ever been, and they've been outperformers. IOC has recently played catch up, and we think there is more room over there. We see another 20% upside there. But HP, BP are definitely four-figure stocks. So above 1,000, you could easily get a target of 1,100 to 1,200 over if this commodity low band on crude continues to remain. Even then, we think they've only strengthened their network. And as a proxy, if we want to name a stock which could benefit out of that, would be Engineers India. That is a stock we've been recommending over a period of time. And even though it's just corrected because of the disinvestment of Government of India, we think Engineers India is the best proxy play on the expansion in hydrochemicals and would be the constraint, it would be the biggest beneficiary because these companies are now sitting with cash and they would be deploying for extra production and so on, and enlarging their facilities. So for us, these three have been outperformers. We would recommend a stock called Engineers India on any decline for a target of close to 350 in the next 1.5 years.
Mr. Bhasin, a quick word on aviation as well, because again, aviation stocks are ones that can actually benefit from the kind of sell-off that we are seeing in crude prices. Can we pull up the aviation stocks to see how those counters are really doing in trade today, and your view there, Mr. Bhasin?
Well, for us, it's an avoid because it's a very high risk. Aviation and media are stocks which have never made money, unfortunately for me. Also, I think the run-up you've seen is more to do with the Indigo IPO, which is there in the next few months, and that could be the play where you could find Jet being in a sweet spot. But otherwise, Sweta, that is a sector we would totally avoid because it's very, very high beta, and in the end, it doesn't generate too much value for the end investor.
Okay, so an avoid there on the aviation counters. SpiceJet is in the red, but Jet Airways is in the green. Any picks that you'd like to mention at this stage, Mr. Bhasin?
Well, we've been recommending some stocks which have been outperformers. NBCC, which has been our star multi-bagger. We still think that is headed much higher. Look for any decline to buy. Ultratech Cement, which has been an outperformer in the cement space, and I think that is our top pick in the entire cement basket. Aditya Birla Nuvo again, which has touched a new high of 2,000 plus. We think this stock is again a must buy in any portfolio. IDFC on the sheer weight of the banking license and operation starting in early October. This TV, which has been a relative outperformer, and we think is the best play on DTH and visibility going into digitalization in second tier cities. And HUL, which we have again been recommending as our best play as defensive and on the consumption space.
All right, Mr. Sanjiv Bhasin, thanks so much for joining us and sharing both your recommendations and your perspective there. Always a pleasure to have you with us. We slip into a quick break at this point. We track the closing and plenty more on the other side.